Are all banks eligible to provide dividends? Are all of them eligible to provide loans and advances with full discretion? The answers to these questions lie within the Prompt Corrective Action or PCA Framework, introduced by Bangladesh Bank back in December 2023, to be effective from 31st March 2025. This is Tahmina Jahan, an analyst at Lion City Advisory, and today I'm going to walk you through the purpose and details of this much-needed PCA framework. PCA is a corrective ladder, intervening early to protect financial stability and public confidence because closing a bank is costly and painful. In the circular's PCA Matrix, Bangladesh Bank sets a simple traffic light ladder. Banks are placed into category 1 to 4, using the capital to risk-weighted assets ratio, including the 2.5% capital conservation buffer, Tier 1 capital, common equity Tier 1 capital, and net non-performing loan. And if more than one trigger applies, the bank is pushed into the worst category. The category also depends on how long the breach persists: 6, 12, 18, 24 months for category 1, 2, 3, 4 respectively. If multiple triggers apply, the worst category prevails. The trigger bands escalate in severity, starting from below 12.5 to all the way down to less than 5% for CRAR, from below 6 to below 3% for Tier 1 capital, from below 4.5 to less than 1.5% for common equity Tier 1 capital, and from greater than 5 to over 14% for net NPL, designating them to category 1 to 4. Liquidity breaches in cash reserve ratio, statutory liquidity ratio, liquidity coverage ratio, net stable funding ratio, and serious governance or risk failures can also invoke PCA. Corrective measures then tighten step by step, starting with an approved recovery or action plan like no cash dividends for category 1 and no dividends at all, or remittances of profit for foreign banks for category 2, and caps on risk-weighted asset growth going from 10 to 8 to 5% and operating cost growth from 8 to 5 to 3% from category 1 to 3. Moving to restrictions on related party transactions, new business or expansion, and capex at category 3, and finally at category 4, Bangladesh Bank approval for new deposits plus strong limits on high-risk lending or investment. Bangladesh Bank can impose PCA anytime in the year, issue written notice, and send a formal directive, aiming to restore normal conditions ideally within 1 year. The bank's board must provide a written guarantee and submit periodic progress reports. Bangladesh Bank is supposed to evaluate the banks once a year and may order special inspections or a special audit by enlisted CA firms. PCA is lifted only after 4 consecutive quarters of sustained normal indicators, subject to Bangladesh Bank's satisfaction. Lion City can help the banks become PCA-ready through capital planning to protect CRAR, Tier 1, CET1 capital, corrective action roadmaps, NPL and recovery strategy, liquidity and deposit mix optimization, governance and compliance strengthening, and regulator-grade reporting, so issues are corrected early, before they become systematic. That's all from me today. Keep in touch with us for more such insights.